What are you thinking this morning, Boris?
So the problem, I think, is that this is war, and as usual, the generals are fighting the last battle. This is not a financial crisis. This is a consumer and a small, medium enterprise crisis. And all the prescriptions we're seeing so far are absolutely wrong. It doesn't matter that the Fed added $1 trillion of his bank reserves yesterday. As you see, the markets reacted very negatively because the problem now is to alleviate the consumer. And you have to do some very, very crazy policies that we couldn't even possibly imagine 2 weeks ago. A couple of examples that are out of the box thinking. We literally need to do probably, as everybody's talking about, helicopter money, $1,000 a week for maybe 6 to 8 weeks to every tax-paying worker in the U.S. Because the other thing you need to do is a national quarantine. If you want to contain the virus, we are going to have to go to a national quarantine. We're going to have to go to some kind of a martial law situation where only the first responders and most important people are going to be able to work. And if you don't do any of those things, you're going to have a much worse, much more protracted problem that's just going to be
Boris, I'll give you a different one.
I
understand where you're going with this. If you give $1,000 to everybody, it's not clear that you don't want them going out the door and going to spend it is the problem. I would be thinking of a national bridge loan. If I told you that we were going to provide a national bridge loan interest-free for 3 months to every corporation in America, small business, large business, what have you, you pay it back over, I don't know, 2 to 5 years, I think that the whole world would be a different place. It would cost us a small fortune.
Here's the problem, Andrew. The problem is that it's not TARP where you have 8 big banks with a phalanx of $1 million lawyers that can know how to apply to the bureaucracy. The problem is anytime you create any kind of situation like that, you're going to have a bureaucracy. Right now, no Joe Donuts, no Joe McDonald's is going to be able to apply for any of those funds and actually find relief if you create a program. You literally need to provide money so they can pay rent and pay food. Otherwise, you're going to have problems going all the way down the line as a domino effect. Secondly, and this is the other component I think is going to be crazy, you're going to have to suspend credit card payments for 3 months, period. And then perhaps even make credit card payments at zero for 12 months. This is the kind of interest rate relief we really need, not the kind of interest rate relief that the Fed is doing. A Fed funds rate at zero means nothing.
Is that the kind of thing, though, that would have to come from Treasury? Is that the kind of thing that the Fed could support the banks doing on the credit card side?
The Fed last night said they cannot do anything for the consumer or for the SME. Powell literally said that on the call because they don't have the jurisdiction. It has to come from Congress. It has to come from the executive branch. It has to be done very, very quickly. It's a completely different situation, and the Fed is completely incapable of dealing because they don't have the tools to deal with that situation. They're doing the best they can for the markets. Now, finally, coming to the markets, the other possibility, which I think nobody's going to like to hear, is we may have to, if the markets keep falling down, we may have to just create a pause in the markets for a week to get them to stop trading, simply because if you're going to mark everything
Boris,
to the market at this point,
You're not the first person who's mentioned this, but I think it's a little crazy.
Yeah.
You start closing the markets like that. I mean, I've heard about this with people I've spoken with on the phone, seen a couple other places where people have potentially talked about this. Right. But if you close the markets for the week, what does that do for confidence?
Nothing. But the confidence is shot already. The bigger problem is, what I'm concerned about is if we go mark to the market and it creates covenants that trigger a whole bunch of margin calls, you literally basically bankrupt everybody before you have a chance for a breather.
Why would that be different a week from now? What would happen?
The idea is if you suspend the markets and you create this massive helicopter money program and everybody just has a breathing space and know that they, for the next 3 months, they have money in the bank that they can pay their rent, they can pay their food, that creates the confidence in the market to then open it back up and maybe have a vicious rally. It all has to be together. Otherwise, if you do this hodgepodge situation,
so Boris, the problem as I see it now is we are literally, if you're an investor out there, hopefully trading, let's say, if you're an investor trying to trade for the short term rather than long term, look, 5 years from now, I hope and imagine we will be in a much different place. However,
100%.
It seems to me, if you're trading in the short term, you're effectively now betting on government policy. This is no longer about much else. Government policy and maybe the ability of our drug companies and manufacturers to come up with a vaccine or some kind of drug that mitigates the symptoms and or what you think happens to the spread of this thing.
Yeah, and absolutely. And first of all, if you're trading short term, I've got to warn everybody, it is brutal, even if you're on the short side. We have the biggest stock market rallies happen during bear markets. I'm old enough to live through 87, and people forget that 87 was the single greatest stock market rally ever. It started at 10 o'clock in the morning, went to 2 o'clock in the afternoon. We were up 10.5% from the lows, and then, of course, we died. So the point is that I think sort of lots of speculative flows on the short side could be just as dangerous as speculative flows to the long side. If you're an investor right now, the only safe harbor that I can think of is relative strength trades. I think, for example, Microsoft against the rest of the market or Microsoft against Apple is probably a great trade simply because those kind of companies with lots of strong cash flow and virtual products probably will have a much better way to survive than Apple, which is basically a hardware company, and I don't think anybody's going to be buying $2,000 Apples or $500 AirPods for a long time. So, yes, I think as if you're a long-term investor, you just kind of either sit still. If you have excess capital, add to it. If you're a speculator, you have to be super, super careful in these markets.